This episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now here on Market Talk is I broadcast live from the Corteva Agriscience Media Day in Johnston, Iowa. He is at his office in Milwaukee, though. John Heinberg of Total Farm Marketing joining us today. John, good afternoon to you, sir, and thanks for pinch hitting for Brian here today. I was thinking it might be another week or so before we got to talk, John, but good to have you back on here this week.
Yeah, Farm Technology Day is going on in Wisconsin, so Brian had to be out of the office, and so glad to be on the pitch in as we got a lot of things happening in these markets this week.
We do have a lot happening in the markets, and just from when we talked on Monday till today, it's been a lot of interesting dynamics. We've seen that July WASDE come and go. We've had this CPI data come out yesterday, that hot inflation number, and then we're talking weather factors. There's a lot of macro, micro factors weighing into these markets right now. And as I look at things today, I mean, corn relatively firm, beans leaking lower, wheat leaking lower. I mean, there's just a lot playing into this grain market right now, John.
There really is. We got so many different headlines now. Let's just kind of clean up all that outside stuff and put that to the sidelines right now. Let's go focus on the weather forecast. Let's focus on what we're seeing in front of us for forecasted temperatures. Typically that should be something that would help rally this market in this window. I mean, you're looking at strong heat moving in next week, 100 degrees plus maybe forecasted here for the heart of the grain belt region. We got pollination right around the corner, if not starting to move into some of those windows. Typically that's an environment we see prices lift. Now we start throwing all the layers on the other side with that inflation data yesterday, the concerns regarding the Fed, the weakness of the crude oil market, just the political unrest as, Prime Minister from Italy, Mario Draghi, decided to step down now. All those things come into play that keep the commodity sector and the markets in a risk-off mentality. Realistically, the corn market's actually performing pretty doggone well today, given all that outside information. So that's out there. So we'll have to see. So again, it's one of those things right now, but one is trying to outweigh the other, where the money wants to be. And for the most part today, it's been pressure in the beans and the wheat market. And corn, like I said, is at least hung in there, as we've seen kind of some broad-based selling overall in the commodity sector overall today.
Well, John, this market really the last couple of weeks, and we've seen it especially here this week, it's really just become about money flow, isn't it? It's become about whether, the New York funds, the hedge funds, they're going to put money back into the commodities or not. And to me, it feels like that money's probably going to be on the sidelines for a little while, which may or may not thing, John.
Very much so. I think that's where we're kind of at right now. And, we put a pretty significant low in, especially in these grain markets, corn and beans here, last week with the move that we saw. We did bounce off those. Now we retested them. We're holding them for the most part here, at least today. So we'll see how that kind of comes together. I don't know if anybody wants to put their neck out there with so many things going on, especially too with the Fed meeting next week and what's going to happen with interest rates, what's going to happen in terms of these outside markets. Again, just a lot of moving parts right now. Like if it was a normal type market year where the only thing we were focusing on was weather, that money would be flowing in probably at this time frame to put some weather premium in. But again, we could wake up tomorrow with a headline that could cause this market to plummet. And that's one of the reasons why you're seeing that money stay to the sidelines. And it's just a risk-off mentality because of the uncertainty. And markets do not like uncertainty. It brings volatility. It brings price risk. And right now, with the way things have been for these and some of these managed money positions, their safest place is just on the sidelines.
Do you think, speaking to the corn market today, do you think part of why corn held in there so well is probably this heat and dryness coming in? Because, I mean, this is the corn pollination time. We're a couple weeks behind on our crops, but so we're getting into that corn pollination time. Whereas you think soybeans, we have a little more time. That's more of an August window. it just feels like that maybe corn is doing its best to hold in there because that forecast looks so threatening, John.
I would say that's the biggest factor right now. At least gives corn market some support. And again, so there is some technical push here. I mean, that was a good turn off that low last week, and we maintained that so far with the sell-off here this last couple of days, and we're still holding above that low. So that keeps some of the buyers in the market, at least at this stage. But again, we got a ridge that's supposed to be starting to form. We're watching a little bit of a weather system coming through here Friday night into Saturday. What they call it, like a ridge runner storm system over the top. Well, how west does that moisture get? That's going to be the big focus on it, and what's going to be the coverage and the extent of it. If it stays a little more easterly and that Iowa area stays dry with that heat coming, you'll see this premium come in pretty quickly, I would assume, like we saw Monday, this week. So that's going to be the big focus right now, is going to be that side of the models, where the weather is. We've seen things dry out a little bit yesterday, and again, they're going to change on an hour-by-hour basis. But right now, the weather is probably at least keeping the corn market supported here, because the demand side, export sales numbers were not very good today. We're still competing with those Brazilian bushels down south coming into this marketplace. And that just makes it very difficult for us to rally there. But we do need some premium in, because if the USDA comes back in August, all of a sudden that yield number comes down from 177 down a couple bushels or a bushel or so, that supply picture tightens up very quickly again next fall, even with those extra acres that we put into the USDA report here this week.
John, one more thing on the corn as well. I'm hearing some chatter from some farmers across the country how they've forward contracted some corn, and they're looking, maybe especially in that western corn belt, they're looking at their crop now and going, oh, this thing's burning up, and they're worried that they're not going to have the bushels to cover those deliveries this fall. So I'm hearing some talk. Some guys are looking for some different re-ownership strategies, et cetera, et cetera. I mean, if someone's in that position where they maybe forward contracted a little too much cash bushels, et cetera, and they're worried about their crop now, is there anything they could really do to try and cover themselves?
Well, you can come back with some ownership strategies, call strategies, or come back onto the board. But, again, we got so much volatility in there. You want to make sure you got something protecting the other side of this coin. Again, if you're going long and aggressive on the board, you got to make sure you're playing some stops underneath this market, under those lows from either, the yesterday or last week. Because if we break those lows, the technical sellers could kick in very, very quickly. But again, call strategies are probably the best. Get some ownership in. They got some cost to them, but at least you got yourself protected. At least kind of see where we are in the next few weeks. Maybe some of those short date calls might be a good way to go. A little less time. If the market does really kick in because the production's not there for you, those can get turned into December futures, and still then you got that ownership to protect those contracts. So that's kind of the biggest thing. Again, just look at your individual situation, talk with your advisor, and to protect yourself some way or another. Because if this thing does take off and we do see a reduction in those yields, and then next thing you know, that supply picture tightens up significantly, this market's got a lot of volatility in it, and that money can pour in as quickly as it left here, and we could go back and retest those highs, and then you're going to be really behind the eight ball in terms of those contracts.
You mentioned export sales a little bit ago, John. Wheat. Wow, what a number there this morning. And I think we haven't seen a number that big since, 2013 roughly. What happened there with export sales for wheat today, John?
Maybe it's finally a reflection that those Ukrainian bushels just aren't out there. And then with this break in price, all of a sudden U.S. wheat got on the competitive side. Now, very interestingly today, more of it probably tied to the strong dollar again in here today, but all that got us was a sell-off off the highs in the wheat market, again, keeping things in front of this. And, the USDA even anticipated that a little bit, bumping the export number up on the report this week, just expecting that price break brings a little bit more business in. But it was encouraging. That's something we've been just kind of sitting here going, okay, when's the business coming? When's that export trade coming into that wheat market? It was kind of under the radar, and that was a good number today, breaking the million metric ton mark. Now we need to see that continue a little bit here before we probably really get some price premium in. But again, that US dollar breaking out the 20-year highs plus here again yesterday, actually 40-year highs, yesterday, just continues to put a lot of pressure on the commodity sector and the export trade that we're seeing at this time frame. So again, we'll have to watch the trend there. That money is still flowing strongly into the dollar, especially with that inflation number and the prospects of how aggressive the Fed's going to be at their next meeting with interest rates.
Yeah, that headline CPI number yesterday, 9.1% inflation. I've heard some talk from the Fed of a 100 basis point rate hike. Do you think that's really possible, John? Do you think they would go that far?
You hear the analysts out there in the business world on those markets, and we're kind of at the stage where, the cattle's already out of the pen here. We need to get aggressive and get under control of this thing. So that's probably not off the table. It definitely, for sure, if they stay with that 75-point level that they did last month, that's kind of the focus, I think, for July. But now we're definitely looking at another bump here in the next meetings in September. So to me, if they got to get on top of this, they need to be aggressive, and that may be the logical move to go, even though it may have some ramifications throughout the entire economy in that regard. But right now that number was fairly ugly yesterday. Now that may be a peaking number. I mean, you think about what's happened to the commodity sector, what's happened to the energy sector. Prices have started coming down, at least in terms of some of those headline items. So we'll have to see how that plays out. But again, right now that they're behind the eight ball, it feels like, and they may have to get that aggressive to try to get this under control.
John, let's switch gears, talk a little bit about the soybean market as well here today. Beans fell off as we worked through the session. Meal still held some strength. We've seen a little bit of spreading between meal and oil here the last couple of days, depending on the day. You look at the soy complex, it seems like, again, the weather risk is there, but anything else stand out to you here as we look at things on Thursday, John?
That bean oil market has just been bludgeoned over the last few weeks here. And again, couldn't find any traction today. And, that was such a premium adding to that bean market all through the spring and the end of the winter with that prospects of biodiesel. And then the edible oil market taking off. Feels like all of a sudden the edible oil market's finding its footing in terms of supplies. So that's been bringing those prices down. You throw the drop in crude oil and that impact on that biodiesel side. And that has just really taken that soybean oil premium off the soybean market. Maybe it's acting a little bit more normal now, per se, where the soybean meal oil spreads are coming in play, where we crush beans for this meal side instead of the oil. That's usually the profit area was for the crushers has been the meal over history. And now this year it's all been about that oil market. So maybe we're getting a little bit of equilibrium. Again, bean market today just couldn't hold in there. Again, that's just probably the reflection of what we're seeing in that overall marketplace. Plus, we're really concerned about what's going on with the Chinese. Obviously, we saw the June shipment numbers in terms of their exports down significantly from last year. Again, that's some of those crush margins that's not very profitable over there. We did see the USDA, probably the number that was the most frustrating or not most disappointing in that report was that 65 million bushel cut on the export demand for next year. So the market may be already figuring some weakness in that demand, even with the supply picture being tight. We need that demand market to fire up. Here we get export sales today, cancellations of old crop by 390,000 tons. That just doesn't help out in that picture that right now we're in a lack of demand market overall, and it just makes beans still a little bit heavy. We did finish well off the lows today, but still negative on the day. It would have been nice if we could at least held some positive gains. But again, fundamentals, what's happening on the demand side, what's the macro market? Again, we still got a little bit of time on weather. If this forecast does hold into August, that bean premium will probably come back pretty quickly because, again, any movement off yield, that's going to really tighten up a very tight picture.
Well, you mentioned China in there, and I think that's something that we have to keep in the back of our minds just with what's going on there and talk of stimulus and more. But that also weighs into the protein sector, into hogs and cattle. And specifically, I think with that hog market reports that, maybe they ramped up hog production so that could help out soybeans. But then on the flip side, if they have ramped up their hog production, what's that going to do for our exports to China? And so you look at that side of the equation on the protein sector. I think that's a fairly big demand story that we have to watch here as we get into the third and fourth quarter more, John.
Very much so. We got some numbers out of China too that meat production or meat imports are down about 30% year over year right now. Now that's probably more reflective on the pork side because beef demand has been very, very good. They've become from basically a non-existent customer to our third largest purchaser of U.S. beef here in the last year and a half, basically. So that number is still a positive number on the year as the movement of beef to China, but that pork number is concerning. Now with that, pork prices in China have been on the climb. They're worried about food inflation. They were very active in the export market last week. Didn't pick up much this week, a little over 1,000 tons. So they are picking up some pork product to hopefully try to get that pork price under control. There's some concerns over there economically right now. If you're kind of reading the little headlines that are popping out, issues in the real estate sector, they put that stimulus package out there. Food inflation is starting to come on the push for them as well. And that's something we got to keep an eye on, because if the economic situation in China were to happen to fall apart dramatically, that's just going to have ripple effects and sledgehammer effects through these markets in general. So another layer of risk that we got to focus on, besides just what's happening in terms of our global economics and our economics here in the United States, what's going to happen if the world's largest consumer of goods, which is China, they run into problems and fall into a recessionary type play. So another reason why, again, we're seeing maybe some of these markets just not get the footing that it needs. You've seen that in the soybean market, cotton market. Hogs have had a nice run, but seem to be topped out a little bit right in this window, and maybe that's some of the reason why.
And hogs, looking at our board today, that July contract getting ready to go off the board here tomorrow, still holding a premium to that August contract. I'll be watching that dynamic, especially as we get into next week, I think, John.
Very much so. And you go look at the cash index, the cash market's been pretty solid in that hog market. Mm-hmm. That futures expiration is a big key. That's also happening in the soybean and the corn and the wheat markets too, as those July contracts also come off here. So that was a big impact. I think it's maybe some of the volatility in prices today as well. So we'll have to see where we're at. You got the index trading at 112, July still at 114. So we got some discrepancy there going into the last trading day. And then that August contract looks a little undervalued, but especially given the cash market and where it is. The hog numbers are still relatively tight overall. So that's still something we got to focus on, is where we are in terms of those hog numbers. I still like that market going forward, but again, maybe dealing with a little bit more of the macro versus the fundamentals in this window, especially this time of year.
Cattle side, seeing a little more cash trade today, but the futures down a little bit. Do you feel like that was maybe some consolidation here today, John?
I think very much so, especially with the outside market influence. We had a heck of a run in the cattle market the first half of this week here, especially in that feeder market. Again, that kind of bucked the trend versus the other commodity space overall, at least in terms of, we saw that commodity pressure and the cattle market seemed to get the bid on some money flow. The funds are pretty tight on that cattle market. They're only sitting on 14,000 long contracts. They got some room to push this. With cash, especially the discrepancy between the north and the south, maybe the market's a little bit undervalued there, especially what you're hearing in terms of the feeder side of the equation, that market felt a little undervalued and it was due for a move, and we finally got it. Now we're consolidating. We'll finish out the rest of the week. Obviously, we got to watch those weather forecasts, because that's going to come into play in those cattle weights next week as well, if those high temperatures hit cattle country like they're forecasted for, and that'll help provide a little bit more support in that cash market.
How about the dairy side? Seeing red on the screen there today, John. Any thoughts with what we're seeing in the dairy markets?
Again, we're falling under the same types of issues of consumer demands, a concerned drop in cheese prices, 5-6 cents a pound today for blocks and barrels, respectively. Now we're talking $20 plus milk. Milk had its time frame. We consolidated around that $25 handle for basically 2.5-3 months there. Now we've broken the downside, and a lot of times that just brings additional selling pressure. So I'm a little concerned here as we're getting down under the $20 handle, even though production may not be there at this time frame, but with corn prices coming down, milk prices coming down, again, we're just seeing that money leave those commodity spaces, and again, just bringing some value out of those markets.
Well, John, fantastic stuff as always. I didn't mention this as well either, but the cotton market, another rough day today. Limit down moves there again. Just a lot of volatility remaining in the market trade. Before we go, any final thoughts? Anything else you want to reiterate for us here on this Thursday?
This is a concerning time right now. Usually in a recessionary type market, commodities do fairly well, but right now in this window, there was a lot of money moving around, and they want to get to the sidelines. And they're going to do that in this window. We saw that into the end of June. Try to maybe get a little bit of movement. Now we're seeing it here. You're looking at those commodities that are affected by the recession, possible trade, affected by what could be happening overseas in China. And the cotton market is a classic example of how quickly things can truly fall apart. So again, still got good value out there. I'd be a seller on rallies and most of these commodities, at least in this window, until we just have a better feeling of where we are as an economy here in the United States and globally. So definitely stay cautious.
Well, John, if producers need some advice, I know they can reach out to you and the team at Total Farm Marketing very easily. How can they do that?
Again, love to chat with them anytime. Give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. Again, don't forget about our website, totalfarmmarketing.com. A lot of great information for producers out there.
John, appreciate it as always, sir. Have a great weekend, and we'll talk to you again real soon.
Sounds good. Have a good weekend, everybody, and we'll see you in a little bit.
That's John Heinberg with Total Farm Marketing, our guest today on Market Talk. That's going to do it for today's show. It's a broadcast live from Corteva Agriscience in Johnston, Iowa for their Summer Media Day. I'm your host, Jesse Allen, wishing you a great rest of your Thursday.